Hello and welcome to this edition of the India Revival Mission brought to you by the Times Network. I'm Nirmala Rai, working from home. As this year comes to an end, we're all entering 2021 with a lot of hope and optimism with the kind of talk there is around vaccines. The COVID-19 vaccine, the administration has already begun in a couple of countries, United Kingdom, United States, and the hope is it should begin in India early on in 2021. So even as the world battles a new mutant of coronavirus, there are big expectations from the new year. There are also hopes from Finance Minister Nirmala Sitharaman's union budget. It's going to be a make it or break it moment, as many experts are calling it. When the Narendra Modi government came to power, one of the biggest brainchilds and one of the biggest ideas they had for the Indian economy was to set up a sovereign wealth fund, a wealth fund that would focus primarily at the infrastructure space. And today, I have a very special guest with me. This is his first ever television interview, the big boss at the NIIF, India's Sovereign Wealth Fund, Sujoy Bose, who is now joining us right here on the India Revival Mission. Thank you, Mr. Bose, for being a part of the India Revival Mission. This is Nirmala. It was first set up in 2015. It's been talked about by the Prime Minister Narendra Modi on several occasions. The late Finance Minister Arun Jaitley had spoken about his big expectations from the NIIF as well. If you look at the last 5 years, how has the NIIF done?
Thanks, Nayantara, for giving me this opportunity. As you said, it's my first interview as CEO of NIIF. And I recall 4 years ago when we first met, which was during a visit with the late Finance Minister Jaitley to Canada, where we met with a number of Canadian pension funds to introduce the concept of NIIF. I think the most important success of NIIF over the last few years has been to establish ourselves as a recognized and credible manager of funds, both from the government in India, from domestic institutional investors, and from foreign institutional investors. Typically, this takes a long time. I think we've managed to do that relatively quickly. And what we are proud, of course, is that yesterday, or actually on Friday, we achieved the final close of our infrastructure fund with $2.34 billion in the blind pool and an additional $3 billion in a co-investment pool. 3 of those Canadian investors that were there that day invested, as have the largest Australian pension fund, a couple of sovereigns, and the American International Development Finance Corporation. We've been investing. We are not just anymore an infrastructure story. We've actually started expanding into private equity. And we've been investing in renewables, in roads. We've created a very interesting smart meter platform. And we have become one of the large players in logistics and container logistics in India. So platform is created, the governance is set, a team has been built, we've got great investors, and we hope now to make a big difference in India's infrastructure and private equity sectors going forward.
So can you give the viewers an idea that when we talk about India's first sovereign wealth fund, how large is the NIIF at the moment and what the immediate focus areas will be?
Sure. Let me start with the question backwards. So we are focusing on 2 asset classes, Indian infrastructure and Indian private equity. And we want to become the largest homegrown fund manager on a sort of a platform that combines government capital, domestic capital, and foreign capital. We want to become the largest fund managers for each of those asset classes in the country. And achieving that objective is crucial because we believe we will understand the market better than most. This collaborative platform will allow us to operate at scale. The governance we bring will give a lot of credibility and comfort to a lot of people. And we will be able to create platform companies, operating companies, that can become large players in their sectors. The areas that we are focusing on immediately is we have 3 funds. The first fund is an infrastructure fund that focuses on core infrastructure such as transportation and energy. We have a fund of funds. The fund of funds, and we already have two investors other than the Government of India, AIIB and Asian Development Bank as investors in the fund of funds. The fund of funds invests in funds managed by third-party fund managers, again, Indian fund managers. And we are just launching the fundraise of what we call the Strategic Opportunities Fund, which is potentially going to become the largest private equity fund in the country. So these are the areas of focus. In the private equity fund, we'll be able to do we'll look at multiple sectors. We've already invested in a debt financing platform, healthcare, education, etc.
So let me just pick up on the three kind of platforms, the products that you have, and I'll begin with the last one that you mentioned, which is the endeavor of which is to have the largest private equity firm in the country. I'm guessing the dream is to be the Temasek or the GIC of India. What is the target fundraise?
The target fundraise for that fund, as we've just disclosed in our, is 2.1 billion again. So we targeted 2.1 billion in the infrastructure fund. We actually exceeded it, which is fantastic. In the fund of funds, it's $1 billion, and in the strategic opportunities fund, it'll be 2.1 billion again, equivalent in INR. Now, you asked a very interesting question, which is, are we going to become in the future the GIC or the Temasek? So we learn a lot from GIC and Temasek. Temasek is one of the investors in our infrastructure fund. But I do believe that we are actually creating a new type of sovereign wealth fund, which is using a partnership between the sovereign and institutional investors to create a collaborative platform to invest into the country. And what we are also actually seeing around the world is now emerging countries are actually following our model, because in emerging countries, there's usually a lack of capital. So often the surpluses, either from natural resources or from trade, is not as much as in many of the developed countries or the oil-rich countries. So in these countries, this concept of collaboration between the government and institutional investors is actually now becoming a new model of sovereign wealth funds. And actually, I'm very pleased to say that a lot of that is being built on the work that has been observed with NIIF and the success of NIIF. So I'm hoping, Nayantara, that someday people in other countries will be asking, their own citizens about whether they are following the NIIF model, and hopefully, that'll happen more and more.
Well, by the way, our motto in ET now is also Rise with India, and we are seeing a lot of new innovation that's coming out from here. So why shouldn't it be for for the financial world as well, and the next era of sovereign wealth funds? So here's to that. But Sujoy, in the interim, 5 years ago is when the entire journey of the NIIF started. Can you give us an idea that in 2015 and 2020, what is the change in mindset of the institutional investors when it comes to India and investing in India?
Sure. So I think when the current government came into power, I think the Honorable Prime Minister, the Honorable Finance Minister, and others and the senior leaders in the government actually started reaching out to the international institutional investor market to build very strong relationships with them. I think the first institutions that took the step to understand India really well, and they had been investing even before, but to take large exposures was from the Emirates, from Singapore, and Canada. And that kind of started a trend that I think has spread even further around the world and deeper within the pension fund industry and the sovereign fund industry. I'll give you the example. We recently, together with the DEA, organized the virtual Global Investor Roundtable. And at that roundtable, we had 20 of the largest pension funds and sovereign funds from around the world. On the Indian side, PM spent significant time at that roundtable, but also there were several other leaders from India, both from the government as well as from business, who participated in that roundtable. One of the things that was very poignant in that roundtable was all these investors not only saying that they built presence and portfolio in India, but practically all of them saying that they want to do more. And many of the ones that had not yet set up operations in India saying that they are actually looking to set up local teams in the country. So I think where we have moved is we have moved from, over the last 5 years, we've moved from institutional investors starting to taste opportunities in India to so today, them looking at Indian assets, Indian investment opportunities as a core of their not only emerging market strategies, but their overall portfolios. In fact, we've heard from several institutional investors that emerging markets is going to become more and more of their portfolio as yields in developed markets drop. And India is going to be a significant part of that emerging markets portfolio. So I think this bodes well. And I think all the relationship building, all the reforms, all the improvements that have happened over the last few years is actually resonating well with long-term patient institutional capital around the world.
Okay. So that is a change that you have seen, and have you started, it all started with, like you said, Canada. Which are the newer countries that are looking at India as a new investment destination? Are they becoming your collaborators, your LPs?
Yes. So we are very proud that and very delighted that Australian Super, which is the largest Australian pension fund, is an investor in NIIF's master fund, which is the infrastructure fund. In our final close, we now have US IDFC, which is the US Development Finance Corporation, which has invested. We've also got, we've got so it's not just about, so Canada has a number of pension funds, right? So historically, it's really been CPPIB and CDPQ, which has been more, which have taken exposure in India. But we are also delighted that Ontario Teachers Pension Plan, and Canada is provinces and states, right? So it's spreading even within Canada. And we are seeing even other Canadian pension funds. So BCI from British Columbia actually invested in the GEO investment. So what we are seeing is, and now we are seeing European insurance companies starting to get interested in some of the InvIT transactions, et cetera. We are seeing new sovereign funds, such as QIA, Oman, starting to take a lot of interest in what's happening in India. So it's not only that things are spreading geographically, but even within the same country, we are seeing more and more players getting interested in building exposure in India. So, we've got in our infrastructure fund, we've got 3 pension funds, 2 sovereign funds, 1 development finance institution. And what is amazing is we've got 2 Indian life insurance companies, and we've got 2 banks and 1 asset manager from India. So it's actually, in my mind, what I'd really love to do next is start getting even larger amounts of exposure into NIIF funds from Indian institutional investors, the pension funds, the insurance companies, et cetera, in India, because I think the international ones are already quite active here.
Now, you've given me a certain kind of idea, you give me some idea of the kind of investment opportunities that you're looking at in India, but can I ask you to get a little more specific into that? The reason I'm also asking this is that, I think time and again, the Prime Minister himself and the Finance Minister, Nirmala Sitharaman, have been quite clear that as we get out of coronavirus in the post-corona world, how there will be far more dependence on infrastructure for the economy to revive. I would imagine the NIIF, for example, is going to play a big role in that, or hopes to play a big role in that.
Yeah, so, within the infrastructure fund, under the infrastructure fund, we've created 4 operating companies. One is for renewable energy, and that renewable energy company is already developing over 1 gigawatt of solar. And we are also looking at acquisitions of companies that are wanting to sell out either parts of their portfolio or their full portfolio. So we are looking at both. We have a roads platform, operating company, where we've acquired a couple of roads. One is a long-distance highway between Hyderabad and Nagpur. The other is the Devanhalli Expressway that connects Bangalore city to Bangalore Airport. These are all very important roads and assets. We've got a logistics company that basically focuses on container logistics. So what we do is we have CFSs, PFTs, these kinds of, and we are in 10 locations in North, West, and South India. And we've got a fairly decent market share now in moving containers around the country, and we will continue to expand that platform. And finally, what I think is a very exciting new area, we've created an operating company for smart meters. So over the next few years, almost 200 million conventional electricity meters will be replaced with smart meters. And we hope to be a market leader in that. And we have a partnership with ESL, which of course you guys know well. And we believe that together we make a very strong force in this sector. And smart meters will, of course, bring a lot of efficiency to the distribution system. Imagine moving from where we are today to prepaid electricity. So we can do all these kinds of different products and services once the smart meters are in place. So these are the kinds of companies assets and companies that we're already looking at. We are very keen on the government's monetization program. So we have been not only active with the government, giving them ideas, but also suggesting to them that the monetization program be sped up. This is also a feedback that I think the government has got from a lot of the investors that they've been speaking with. And I believe that at this point of time, with yields low in other parts of the world, the government's monetization program, which of course is a part of the NIIF, but also can finance the parts of the NIIF, will be actually very sought after by investors like ourselves and others. So lots to do in infrastructure, and I agree that it's the right time to actually focus on infrastructure because interest rates are low, commodity prices are low, and capital is available. It's only how, and I think the government has also been quite smart about realizing that it's different ideas for different investors. So, some investors will have HAM, other investors will have TOTs, other investors will have InvITs, and so on. So I think it's an exciting couple of years that we are looking at from an infrastructure investing standpoint.
So, if you've got such big ideas at the NIIF, India's infrastructure story, I'm going to play devil's advocate here. Why are we seeing this clamor and this call from India Inc. repeatedly for India to have its own development finance institution? That too at a time when, interest rates in India are far higher, the cost of capital is far more. Why can't NIIF fill that void? Because isn't that a big opportunity that you might be missing out on?
Yeah, so NIIF has actually already built a debt platform, which we are scaling up rapidly, and I think will become a very important player in infrastructure debt. But it's not a DFI, it's not a development finance institution. And I actually think there is a role for a development finance institution in India as long as that DFI focuses on the right kinds of products. So there are, the key requirement for efficient infrastructure investing. We do equity, right? So we invest equity. We need products on the debt side that are long-term, fixed rate, etc. And there are lots of areas where a DFI, if they are able to bring those products in, today you cannot get a long-term fixed rate product in the market. And that has to do with the fact that the yield curve does not go beyond a certain term. And I think a DFI with the right management, with the right approach, with the right strategy can play a major role in helping people like us who are equity investors invest in infrastructure much more efficiently and reduce our risk. Because what we have today is we are financing long-term concessions, 30-year concessions with 5-year fixed rate loans, right? So even if the tenor of the loan is 20 years, the rates change every 5 years. How do you bid on a 20-year concession or a 30-year concession with a 5-year fixed interest rate, right? So this could, a DFI, in this kind of an environment could really change and improve the ability for people like us to invest. We will be a major player on the equity side. And then, of course, there are banks and other institutions. Our NBFC that we own will play a major role on the debt side, but the DFI can actually help all this happen with a better asset liability management match, and also by providing instruments that we cannot access in the markets.
So, when you must be also raising funds, you have to be very careful about your Circular 2020. I'm sure you can guess the question I'm asking, and that is to make sure that none of your collaborators or LPs are also raising money from Chinese investors. Has that been a challenge?
No, we don't work with fund managers. We raise money from the actual pension funds and the sovereign funds and the insurance companies and so on. So we are actually, we actually go directly to the Canadian pension fund or to the, let's say, the Emirati sovereign, Singaporean sovereign, etc. So for us, it's crystal clear where all this happens, and then we raise money from multilaterals. And as we saw in the latest circular, I think the government has recognized that the multilateral development banks are a unique. They have a unique aspect in terms of what they bring in terms of collaborative platforms. So there, we are fully I would say, in line with what the government has actually come out with. So we don't see ourselves running into any of those gray areas that some other asset managers may be running into.
I want to now talk to you a little more about deployment. You've given us hints, but let's get down to specifics. At a time when, we need the economy to start reviving with a special impetus on infrastructure and all of that. 2021, any specific plans from the NIIF? Are we going to see far more deployment? Can you give us a sneak peek of what's to follow in the new year?
So, the purpose of NIIF is really to show international investors and domestic institutional investors that money can be made investing in Indian infrastructure and Indian real estate, in Indian private equity. We are not in the business of deployment. We are in the business of investing and making a return out of those investments for our investors. We actually think 2021 could be a very exciting year, a very active year for us. It's not that 2020 hasn't been active, it's been quite active. We expect a lot of monetization opportunities to come from the government. And a lot of large infra investing depends on that, right? So we need to see asset monetization from the government because that's really what will create opportunities for us to invest. But we are also looking at a lot of private-to-private transactions. So there is a lot of capital requirement in the market because certain balance sheets have gotten over-levered. And we are working with we are looking at a number of opportunities as well as, on a private-to-private basis in terms of acquisition. But I want to be crystal clear. Deployment is not an objective for us. For us, the objective is to make good investments. And I think, as I always say, the best thing we can do for the country is to make sure that international investors know that they can make good returns investing in Indian infrastructure and Indian private equity. So that's what we are really setting out to do.
What kind of returns? How competitive would the returns be with the other emerging economies?
So what we have heard from our investors, obviously the fact that we have raised money shows that investors are seeing returns here as attractive on a risk-adjusted basis. I think the way I would state this answer is to say that yields in the developed. So there is a lot of push towards moving more money into alternatives because bond yields have really fallen in the developed markets. Stock markets are high, so there is a lot of movement of money into private equity, infrastructure, etc., the alternative asset classes. Now, in particular infrastructure, yields in the international markets have fallen in the developed markets, and they've fallen both because the bond yields have fallen as well as there's a lot of competition for what's available over there. Now, in the Indian market, the risks are higher than in developed market, but the returns are also higher. And the one great advantage of the Indian market is there is scale. So for large investors who are looking at allocating exposure to infrastructure and to private equity, they do see growth and they do see yields in India and they see scale. And I think the combination of those three are allowing them to look at India as a very competitive market when they even look at other emerging markets. And and that's why we are seeing the kinds of flows of capital that we are seeing this year and in the last few years.
Sujoy, is very clear and apparent that in the new financial year, NIIF seems to have, from this interview, I can make out big plans for the monetization opportunities that will exist in the government. So you will be a big participant, I'm guessing, in the government's privatization as well as disinvestment program. And you seem to have some plans for for the private sector at large, especially those that are over leveraged. We're completely out of time. So here's wishing you and the entire team at NIIF a very happy new year. And we'd also like to, on live television during this program, give you an invitation to be back here as soon as your first investment is done in the new year for the government's disinvestment program and, of course, in the private sector.
Thank you, Nayantara. It's been a pleasure, and I'm so glad that we were able to do this discussion together. Thanks very much. And Happy New Year to all of you.